conversation with Ronak Onkar, the research head and fund manager at PPFAS Mutual Fund. Ronak, hi, morning, and thanks so much for your time. First up, give us a sense of how you are navigating the kind of correction, if you could call it that, once again, that we're seeing in the market. Any fresh money that you're deploying, given that we continue to be in a slump, or is it more of a wait and watch approach right now?
Hi, good morning. Thank you for inviting me. You're right, it is more of a wait and watch approach for us. So if you look at our fact sheet over the past year or so, even more than that, we have been sitting on a bit of cash, trying to find better opportunities to deploy money. But on the other hand, wherever we have deployed money, it has always been in areas where we were comfortable with the valuations and the business quality. Some of that includes private sector banks. We have also incrementally added via our dividends in the international stocks. We have also bought a little bit of domestic companies in the auto space over a period of time. So we have added wherever we found valuations to be reasonable. But on a broad basis, it is a very expensive market. Despite the correction, it has not meaningfully corrected to justify the tepid growth that some of these sectors are having in the future. So we will wait and watch till the opportunities come towards us.
Ronak, hi, morning. Since you do invest in global markets too and track that very closely, I wanted to figure out what is it that you're making of the trend, that's happening in the US right now. You know, while we are all talking about the S&P and the Nasdaq at record highs, the fact of the matter is that it's those 8 mega caps which are contributing to that, and that's very, very high tech concentration. What's that telling you about, you know, the nature of the rally which is currently at play in the US?
So interestingly, most people think of them as purely tech businesses, but in fact, they enable a lot of uses of tech over a period of time. So if you see the kind of companies in that Max 7, you will have some semiconductor companies whose hardware is required by other companies to implement all the AI tools or even use cloud services. If you look at some of the companies in the digital advertising space, that has been a trend for the longest period of time where traditional media has been losing market share for advertising and eyeballs to social media or digital media. So that trend has been there. And most of the companies who are embracing that, these are enterprises who would otherwise advertise on traditional media, are going towards that. So it's a long-term trend that has been affecting. Then if you see e-commerce as an important trend, that has been a large beneficiary over a long period of time. We have seen sales moving from physical as well as omni-channel and online. So these longer term trends and software adoption, all of these things are part of the top 8 companies that we see. Of course, one can argue whether the valuations are attractive, which ones are reasonably priced. But I think generally the index will represent some of the burgeoning or upcoming trends, which also show earnings and cash flow growth. So this is not on the basis of just stock prices going up, but also these companies generate a good growth in their cash flows and earnings as well.
Okay, that's a very interesting point, Ronak, that you made. So tell me, out of the Mega 7 in the US, looking at the entire supply chain, any Indian companies or any Indian connect that one can make, and investors here can look at those names?
I think in many spaces, for example, in the Mega 7, unfortunately, at this moment, we have been users of these technologies and services. We have not been path breaking in terms of having our technology stacking up to the tech of some of these larger companies, but it's slow progress. So we are developing a very strong manufacturing backbone. We already have a good services backbone. In fact, if you look at some of the chip design companies, bulk of the chip designing staff also resides in India. They have had GCCs in India for the longest period of time. So we have the technical engineering talent. We just need to scale up on the other parts of the supply chain and maybe become as relevant as some of these large giants are.
All right. Hi, Ronak. Good morning and good to be speaking with you. I remember the last time we interacted was back then when we discussed this whole India and China EV story playing out and the comparison, of course. But with this whole GST rollout, Ronak, what's your current take on autos? Have you added anything afresh in your portfolio, be it from the auto or the auto ancillary space? And the other question is with respect to the EV players. Earlier, they used to demand a premium with the kind of growth opportunity that lies ahead. But with this ICE rates and the GST reset, do you believe EVs will continue to demand that premium, or that time is gone?
To answer to your first question, we have not lately added to the auto positions that we have. We already have sizable holdings in Mahindra and Maruti Suzuki. But to answer your EV question, I think EV should not be looked at from a quarterly or a news flow kind of a time period. Let's zoom out a little bit and take a longer term view. Just 3, 4 years back, we did not even have technology indigenous to us. Now we have a lot of manufacturing happening in India, but also we depend a lot on imports today. That is being corrected over a period of time. So just like the ICE ecosystem has been built in our country, we are seeing the EV ecosystem also being built in the country, both on two-wheelers as well as four-wheelers. And whatever small resets in GST and all these things happen, we should not forget that we still are increasing our power supply given to the citizens of the country. We are also trying to build our grid and make sure that we have more transmission points. We are also seeing a lot of demand on power from other areas like data centers, etc. So we need to make sure that the infrastructure is available for the rollout of EV services. So we need to give it a time to see how the EV adoption happens. And in the end, the products have to speak for themselves. The companies who are putting these products out, they have been in various iterations of these products. So they will see how these products perform, they will refine and improve. And imagine what we had 3 years back and how many EVs we have in India today and how they look and what kind of features they have. It's quite astounding to see the development. And I think we should wait and watch for a longer period of time, but be positioned in that. So both the companies we own, one of them is a ICE leader and the other one is now growing in the EV space. So we'll see how both these things play out.
Right. And Ronak, given the way you have been allocating funds within your portfolio at a time like this when the markets have largely been in a lull and not much is happening, do you believe it would be safer to now invest money into gilt-edged securities or towards the debt side compared to equities?
Debt has been a very attractive place. So if you see some of our cash holdings, they're also in the form of CDs and CPs, which are shorter term oriented. So it's not necessary that the fund, when it keeps money idle, it invests only in money market securities, but you can actually get a little bit higher return by investing in the debt securities. But if you look at hybrid funds that we have in the portfolio, we have been advocating for a while that it's a great time to reallocate to debt because in the last few years, if your equity allocation has gone askew because of the one-way move the market has had, maybe it's a good time to reallocate the assets to balance between your equity and debt allocations.
Okay, so that's the take coming in on how you have been deploying in your portfolio, and of course, gilt-edged and debt looking more attractive right now. In terms of your portfolio allocation, when I see it's got names like arbitrage, you've got diversified FMCG, consumable fuels. I want to discuss more about diversified FMCG, Ronak. What exactly would constitute or would fall under this umbrella? And given the GST cut that we've seen, also the RBI front loading happening, you also have income tax cuts that coming in. Would you rather play the discretionary theme right now? Is that something that you're eyeing?
We would love to play the FMCG theme. In fact, these are some of the most stable consumer companies with great cash flow opportunity over a long period of time. But unfortunately, if you look at the entire consumer space, for the past 4 or 5 years, it has been extremely expensive and way beyond the comfortable valuation zone. So the only consumer stock you will find in our portfolio is ITC, which we also started accumulating somewhere in the COVID crash. In fact, that was the most reasonable consumer stock we could buy at that time. And we still continue to hold a chunk of it because the cash flows have been good, the capital allocation has been sound, and the dividend policy has been revised. So it's a good play, still reasonably priced compared to other consumer plays. But yeah, despite the quality of the business and the quality of management and consumers, the valuations are extremely stretched. So we have generally stayed away from them.
Right. Okay. Ronak, what happens to the entire defense, railway, shipbuilding, that entire pack? Frenzied and fancied once upon a time. People learned their lessons, burned their fingers, and now again you are seeing tremendous order flow and even stock price move.
So interestingly, the stock is not the business, right? The stock might have expectations built into it, but the business has to prove over a long period of time. So some of these trends are in the right direction. We just need to give it time to see the actual cash flows coming in, actual orders converting to cash, technology transfer to Indian companies, even some indigenous technology growing from India. So we have a lot of these pieces in place, just like in the other manufacturing ecosystem. But over here as well, maybe the expectations are a little bit ahead of what is actually being delivered. But it's the right direction in my view. In the long run, I think we will be a stronger country if we have indigenous manufacturing in India for defense development as well.
All right, Ronak, so good having you on the channel today. Thank you so much for your time and speaking.